and they're all very good. Private final consumption expenditure, the aggregate number is 19.4 lakh crore. That works out to an 8.2% growth year on year. And government final consumption expenditure, which is 3.6 lakh crore, represents an increase of 8.7%. So once again, to revise, personal consumption, private final consumption expenditure looks like has come up 8.2% higher. Government expenditure has come in at 8.7% higher. If I'm not mistaken, capital formation at 11 lakh crore, 11.4 lakh crore represents an 11% jump in year-on-year terms. So those are all very good numbers. Of course, we are all looking at a very low base in terms of at least capital formation. But regardless, at 19.4 lakh crore, the private final consumption expenditure is at least 8.2% higher. I just want to give you an idea for those of you who don't look at these numbers regularly. And after all, why should you look at lagged numbers so regularly? The private final consumption expenditure, I think in 2018 or 19, was as high as 20 lakh crore and 21 lakh crore in the second quarter. I'm comparing quarter to quarter. So we have not yet reached the 2019 level, but at least compared to 2020, we are better off by about 8.1%. Mr. Joshi, your thoughts now that you have a little more numbers?
Well, I think it will also be interesting to look at how the sequential growth has performed, whether actually the government financial final consumption expenditure is higher than what it was in the last quarter.
Sir. It is not,
so I
sir.
think my sense is that year-on-year growth, year-on-year growth.
Last quarter was 4.21 and Q2 is 3.61 lakh crore. So quarter on quarter, it's a fall.
So the base effect is also playing on the year-on-year numbers. So I think the sequential growth, I think similarly, what's happening sequentially to investment, my sense is investments would have grown somewhat, I think, over the last quarter because they were hurt by the pandemic. So from that perspective, I think the investment story might look a little more positive, I think, than the government consumption or even the private consumption story.
Private consumption actually, both in Q1 and year ago Q2 is about the same. 17.8, 17.9 lakh crore. So even quarter on quarter, private final consumption expenditure works out to about 8.2%, whereas 8.3% maybe. It's a little better. The aggregate number at 19.4 lakh crore compares with 17.83 last quarter and 17.93 year ago Q2. So we are not talking very different. Likewise, as you pointed out, Mr. Joshi, for capital formation as well, gross fixed capital formation on a year-on-year and a quarter-on-quarter looks the same. It was 10.2 lakh crore in Q1. It has jumped to 11.4 lakh crore. If you take year-ago numbers, it's much the same. 10.29 has become 11.42 lakh crore. Okay, further thoughts, Mr. Pan, on all that you have heard?
Yeah, so I think the critical piece that we would continue to look at is the private final consumption expenditure and how it plays out going forward. Simply because in terms of the space within the fiscal, there may not be adequate for the central government to actually push forward capital expenditures even further. So as I was mentioning, the new virus strain and how it has its implication in terms of the economic activity going forward will be important. More important for me is not really the current year's number, but maybe the numbers in the year beyond, simply because we continue to see wage growth both on the rural and the urban side relatively on the lower side, even though employment generation has come back to a significant extent. So some of these issues will continue to have its implication in terms of the growth momentum for the country beyond the base effect led jump that we are seeing. But having said that, I think the good thing is that the nominal GDP growth is high, which actually is helping the tax collections of the central government and also would be able to able to lead to the central government achieving its broadly the 6.8 to 7% target in terms of fiscal deficit GDP, even though expenditure commitments, especially on the revenue side, would have gone up.
Okay. Oh, are you changing your full year numbers, therefore, Indranil, after looking at these numbers?
Yeah, so 7.8% was our original number for Q2, which was leading to a 9.1% growth. I immediately can't commit, but I think there has to be a bit of an upward revision because Q3 initial numbers that we have seen in terms of the retail sales, etc., and all the understanding that we have of the festive demand may actually also lead to a Q3 consumption expenditure to be relatively better. So we might have to revise our numbers higher, maybe to around a 9.3 or a 9.4.
From the current?
From the current 9.1, assuming that 7.8.
Fair enough, fair enough. Mr. Joshi, will you be revising your number upwards or downwards? Anything?
No, I think because the GDP has come in very well, but I think so has Omicron. I mean, so we'll wait for that to how it plays out. I think before changing the numbers, because this is a new twist to the story, and we really don't know at this juncture how serious it is. I think it's if the travel which was slowly beginning to pick up. I mean, if there are travel restrictions, I think that will hit the travel industry as well. I mean, so let's keep our fingers crossed on that at this juncture. So no revision from our side. Okay. We are at 9.5%.
You know, the quarter-on-quarter momentum of GDP is also about 10%, Anubhuti. Does that give you enough fodder to revise your number upward?
Not really, Lata. We have a GDP forecast for full year at 9.5%. Though this number is on the lower side than our Q2 expectation, I think the momentum in the current quarter has been pretty strong. So hopefully the second half growth can turn out to be better than our current projection of 5.2%. And as highlighted, we'll have to await more clarity on this new variant. That will give us a better sense on the GDP over the next 3 to 4 months. But as of now, 9.5% looks pretty good to us. Again, as I was highlighting, I think while this number has been lower than our expectation, what has surprised us very positively is this pickup in the services sector. Of course, there is a role which public admin expenditure has played in getting a services growth rate of 10%. There is a favorable base effect too. But I think the services sector is picking up at a much better pace than what we have been penciling in our growth. And if the current variant doesn't prove out to be a disruptor, then probably we can look at a sustained growth momentum over the next few months, where services actually take the baton from manufacturing.
Okay. Well, Mr. Joshi, I wanted to ask you specifically about this private final consumption expenditure. It's a good number at, 19 lakh crore, did I read out? 19.41 lakh crore. But like I was pointing out, if I looked at 2019 or 18, we were still running in one quarter at about over 21 lakh crore. We have still, in consumption terms, not reverted to pre-COVID levels. Would that be a pain point?
Well, it is. I mean, because consumption, it is the bulwark of the economy is private consumption. It's more than 55% of the GDP. And I think what's worrisome for consumption is, I think, the fact that the prices have risen. And I think that is consumption negative. Although I think the reduction in the price of or the taxes on fuel, I think is somewhat consumption positive. And pickup in services is also will also augment the incomes of those who are attached to these services. But I think so it's a mixed picture on consumption that is playing out. There are some drivers, and I think some of the segments are the supply is not enough. The demand is shooting ahead. I mean, like the automobile sector, for instance. So it's a very, very mixed picture that is emerging. And overall, I think consumption still, I would say, in aggregate, in nominal terms, it will look very good because of the price effect. But I think in volume terms, I think, or in the real terms, I think consumption growth is still lackluster.
Okay. That would be a